Facebook users' data leaked, General Electric is headed for a rebound, and DOORDASH hits back at government regulation. All this and more on this week's Invest Roundup. Hey guys, it's Terry and you're watching this week's Invest Roundup. Last week, the Dow Jones Industrial Average rose 0.5%, the Nasdaq Composite gained 1.8%, and the S&P 500 increased 1.2% to a new high. This was the first time the S&P 500 was above the 4,000 level, and it's presumably an after effect from President Biden's infrastructure spending proposal. Meanwhile, in a rather bullish prediction, Bank of America said that employment rates will soon be back to pre-pandemic levels end of this year if all goes well. According to them, this is due to considerably more job creation in leisure and hospitality, the two industries hit hardest by the pandemic. This, however, contradicts what Treasury Secretary Janet Yellen said, who believed this will only come next year. In the meantime, let's get into this week's news. Disclaimer. Whatever stock or news we talk about is not a recommendation to buy or to sell. These are all just news we deem important, things we think you need to know if you've invested in the stock market or if you intend to invest. First news item. Looks like Facebook is in trouble for their data again. Last week didn't end so great for Facebook when 500 million of their users' personal data, including Mark Zuckerberg's, was leaked in a low-level hacking forum. This includes the phone numbers, Facebook IDs, full names and locations of users across 106 countries. While Facebook claimed these are all old data from a similar case 2 years ago in 2019 and the issue had since been fixed, experts say this could still provide valuable information to cyber criminals who could use this personal information to impersonate them or scam others into handing over login credentials. Now, if you're getting ready to dump your Facebook shares, hold your horses. Despite all the hoopla, barons still say that Facebook stock is a great buy and could even gain more soon. And why wouldn't they? They own Instagram and WhatsApp. They are closing in on 3 billion users. That's literally half the world population. And they even have former US Secret Service agents to protect the top executives to make sure nothing bad happens to them. And aside from all this data controversy, Facebook is actually making themselves useful. Just recently, the security team issued a warning to Uyghur activists living in the States and urging them to be more careful as they found Chinese hackers targeting the Uyghur community on the platform and attempting to spy on them. Apparently, these hackers would pose as journalists or members of the Uyghur community to build trust with these targets before tricking them into clicking on malicious links and secretly installing spying software on their devices. At the moment, Facebook is still a great investment, and apart from not being a great dividend stock, they're pretty much excelling at every other aspect. Second news item. One of the biggest stock market pioneers, General Electric, might be ready to make a comeback. Is General Electric about to pop after more than 4 years in the slumps? The company was on top of the world for more than a century before they fell from grace in 2018 and was officially dropped off the Dow. But it seems like the company is ready to make a comeback, this time with renewable energy. GE Renewable Energy, which provides offshore wind turbines, high voltage equipment and other related products, have had a 32% increase in their order in the fourth quarter of 2020. And just last week, they announced to have received a contract to supply 492 units of onshore wind turbines for Oklahoma's North Central Wind Energy facilities. Not only that, the company's other arm, GE Power, also recently secured a 22-year maintenance services contract with Reliance Bangladesh. This segment as well has increased 27% organically this year. Not too shabby for a company who's been in business since the 1800s. In the past 3 months, General Electric's share price has increased 25.4%, which was triple the gains of S&P 500. In fact, according to Bazinga, GE investors who bought $1,000 worth of GE stock this time last year, it would be worth around $1,737 today, assuming reinvested dividends. CNBC predicted that GE could rebound to levels not seen in more than 3 years if all goes well. And there's also President Biden's new infrastructure plan, which focused on clean energy, which could catalyze GE's growth even further. At the moment, their intrinsic value is still at $8.57 and does not seem to reflect the potential yet. However, if CNBC is right, we're bound to see the value jump very soon. On a serious note, you guys have been really naughty lately. Some have yet to subscribe, yet to smash the like button. So what are you waiting for? It just takes a few seconds and it will really help the channel out so we can bring more market news to you. Next news item. DOORDASH hits back at new regulation across the states. As we've all learned from Facebook, when business is that good, there's also that much trouble. And that's exactly what happened with DOORDASH. The app went through some hurdles lately, and let's just say, for a company that's only been on the stock market for a few months, it's a wonder they're still surviving. Short story time. As we all know, the app offers convenient services to both restaurant owners and customers, where the platform will impose 20 to 30% commissions on the restaurants while also charging customers delivery fees. The thing is, restaurant owners weren't happy about this, and instead of negotiating with DoorDash, they approached local governments to impose legal caps on these fees. So, the local government complied and imposed a 15% cap on commissions. In response to this, and to recoup the lost revenue from this regulation, DoorDash tackled on another flat surcharge on what they call regulatory response fee, making it that much more expensive for customers to order food now. An article subheadline even says, "Congratulations, the government helped so much that ordering your dinner now costs 10% more." And that's not the end of their problems. DoorDash is now also seeking tens of millions of dollars in damages from Olo, its partner that managed its online orders, after they supposedly breached the contract and fraudulently overcharged DoorDash. In the second quarter of 2020, DoorDash made its first profit ever, just $32 million after going public in December. Overall, sadly, the company remains billions of dollars in debt and has not turned a profit. As expected, they are considered a medium-risk investment at the moment, particularly for shareholder dilution issues. So, will you consider DoorDash? Fourth news item. With more and more companies accepting payments in Bitcoin, is Bitcoin the future payment mode? Some say yes, some say no, but one thing for sure, more and more companies are embracing it. More recently, Starbucks, KFC and Tesla. It's widely known that Bitcoins are so volatile, even major investors like Warren Buffett criticizes and warn others against them. Some companies, however, are not deterred and have proceeded to accept them as a mode of payment. Last year, Burger King Venezuela announced it will begin accepting Bitcoin and other cryptocurrencies. Twitter's CEO and founder Jack Dorsey teamed up with Jay-Z for Bitcoin endowment. In February, Elon Musk even announced that Tesla would accept Bitcoin as a payment method for all models in the US. Sounds like it's happening, right? Well, before you load up on your Bitcoin wallet, you might want to hear what Market Insider have to say in their recent article. According to experts, Tesla's decision to accept Bitcoin as payment is unlikely to be followed by a lot of other companies for 4 reasons: volatility, high transaction fees, non-acceptance by the IRS as currency, and digital wallets are not yet well regulated. In an article by Inc. magazine titled "What You Need to Know Before Accepting Bitcoin Payment," it was also stressed that as much as there are advantages to Bitcoin payments, for now, Bitcoin payments are irreversible and illegal in some countries, making it less ideal choice for payment. So, if you ever want to load your digital wallet, maybe just load up the few extra bucks that you have for now. Those are the 4 important investment news we had to share with you this week. Once again, we encourage you to get more information if you'd like to act on any of the companies we shared about earlier. Comment below and tell us what you'd like to see on Invest Roundup, and share this video with your friends, especially those who are vested in the stock market. We'll see you next week.